Hi everybody, this is the Investing teacher, high school science teacher, teaching others how to invest. In this quick update video, I want to go over my June and year results to date. I'm going to compare it to the S&P 500, see how I'm doing, apples to oranges there. I'm going to look at how I'm trying to lower the cost basis, earning significant premiums on IVR, Wish, and BBIG. Go into a little detail on those companies. And we're also going to look at my July and future plans for selling premiums to earn net income. Like, subscribe, share, all that good stuff. Definitely helps out the channel. If you have any questions, leave a comment. I read and respond to all of them. And let's get right to it. So June of this year was one of my best months I've had. Really good month and good year so far. Well surpassed the 2% a month goal. And let's look at some of the numbers. Okay, so here's my June and full second quarter trading results. I beat the S&P 500 every single month in 2021. I don't necessarily expect that to happen forever, but every single month beating it out, I'll take it. So here's a chart of my monthly returns. The first column is the months of the year. Then I made the premiums received each month. Total return, I just added up the previous months. I showed the amount invested. Here's my percent gains. It's essentially the return divided by the amount invested. And then I'm comparing it to the S&P. So in June, I made $2,458 in premium. That's after counting commissions through the brokerage. Total return through the year is $9,238. And notice that I didn't start with my full account until pretty much middle of May. For this month, I made a 6.3% gain in my premiums received divided by the total invested. The S&P 500 made 2.14%. If you compare the two columns, every single month in 2021, I beat out the S&P 500. And from doing this, I'm going to be investing $43,007 in July. And goals, again, 2% a month. As you can see, I've reached over 2% a month in every single month of the year. This was the S&P 500 returns. As you can see, from March to June, it was about 10% in gains. But when you look at my gains in the last 3 months, we're at 4, 2, and 6%. So definitely beating out those returns. So while the S&P 500 might be showing drastic gains short term, I keep collecting these pennies using the option premium. And as you'll see, beat out the S&P so far every month this year. Here's a few other benefits that I've received in the last month and a half. I moved my covered call strikes of Palantir, CCIV, and RKT. For Palantir, I started with an initial cost basis of $23.50, and it dropped all the way down to $18.94 in only 3 months' time. That's a pretty significant drop based on selling covered calls and also cash secured puts on this position. I did let it expire last Friday at the $23.50, even though the stock went up past that. However, I did make a $456 gain. It's the difference in the cost basis off of the original $23.50. That's a 19.4% gain in just 3 months. So getting assigned on that, selling covered calls, moving those out when I needed to, or just buying to close them at good profits could really add up even in the covered call side. CCIV I do currently still have, brought the cost basis from 26 down to 1987 in about 3.4 months or so. Right now I do have a covered call at 26 and it's hovering slightly above 26 right now. I did make a covered call at 716 at that same strike price. This will be a $613 gain. Again, the difference of the cost basis off of $5,200 because I did this with 2 positions. And that's an 11.7% gain. Another strong gain for a company that went from 26 down to the 18s at one point. But sometimes you got to be patient and hopefully it'll bounce back up. RKT unfortunately hasn't bounced back up where the others are. It brought the cost basis from 23 down to 2086 in 3 months. So still went down over $2 in the cost basis just by selling those covered calls. Just keep subtracting that original strike from that premium. The stock is still under the 23 strike, however, so I'm going to continue selling covered calls on this. CCIV, again, I'm going to let it go if it leaves a 26. Palantir, I use the 2350 for other positions. So here's my plan that I'm going to be using for July and for the next few months, lowering the cost basis on Wish, IVR, and BBIG. Here is the plan that I want to use for 3 different companies. One is BBIG. Here I'm selling monthly covered calls. I did a buy right where I bought 100 shares of the stock and then wrote the covered call on it. And I'm selling them above the strike price because I want to be able to possibly gain some capital gains, as well as you'll see, pretty high premiums. BBIG, right now, the stock's at 3.97. I started this position at 4.15, so a slight loss there. But I brought my cost basis all the way down to $3.49, and this is off 9 plus 3, 12 total, 1,200 shares of 12 positions. I ended up selling 9 covered calls at 6, pretty high gain in capital gains. For $8.20, left it out a few months in time, and I earned 0.66 in premiums, so $66 times 9, looking at a good income there. I also sold 3 covered calls at 5.5, a little bit lower, but still good gains. And that's for $7.16, earning $52 per position. So pretty massive premiums going on with BBIG. Another one is for Wish. I'm selling monthly covered calls way above the strike price, not slightly above. Stock currently is at $13.47. Cost basis brought it all the way down to $11.85, and I just started this pretty recently. Sold 2 covered calls at 17, pretty big jump here for $7.30. Earned $267 per covered call. And then I sold 3 covered calls all the way up to 25, seeing if there might be a big jump and taking advantage of it. And that's earning $153 in premium. Both of these covered calls are earning 10% plus a month. So right now the Wish implied volatility is very high, which is allowing me to be getting very high premiums on these that are still far out of the money. If you look at the in the monies, they're even higher than that, almost 15% a month. Last position I'm doing this is with this IVR. It's a mortgage REIT, an MREIT. Monthly covered calls again above the strike price. Stock currently at $3.92. Started the position around $4.10. Brought the cost basis down to $3.57 already in about a month. Ended up selling 8 covered calls to 4.5, so higher, one whole dollar over the cost basis for $7.30. Earned 18 cents in premium. Not as high as the other 2, but they are paying a dividend, and you could get in on this if you get on it quick. Ex-dividend date on July 2nd will pay 9 cents. You'll receive that dividend in 7/27. So my plans for July is to go on a big road trip, not a boat trip, but I'm going to be driving all the way from Texas to New York and going to just hang out with Theta, decay these options, and then continue buying the close at these profits. Keep collecting those pennies. They add up. So again, my plan July, we're going to head on a road trip on July 2nd, going from Texas all the way to Pennsylvania, Delaware, New York, bringing my wife and 2 daughters with me. If you could give me some extra Pepto-Bismol, appreciate it, because it's going to be a lot of upset stomachs. Going to make most of my cash secure puts and covered calls expire at 7:30, and I'll be back from the trip after that because I want to leave my positions to just decay on their own. I did set good to cancel, buy to close orders at a 50% profit. So all the positions that I have, let's say I made $100 in premium, I just set a buy to close order at 50. And then if it happens to go down to 50 in the strike price, it'll automatically exercise. Don't even have to look at it. Set it and forget it. It's like the Ronco electric food hydrator and those rotisserie grills. Plan for the next few months, though, I'm going to keep selling way out of the money cash secure puts with high IV and low delta, just like I've been doing the last few months. This is my core strategy here. Good till cancer, buy to close at 50% profit, just like before. I am considering looking at buying a close at a faster profit than the original trade when possible. So for example, say I made $100 in premium in a 30-day till expiration. I might try to buy till cancel at, say, 60 1 week out, because 1 week out would be 7 days, and the premium should be about 0.75 if everything's going to play. So if you buy to cancel a little bit lower than that at 60, you would actually be increasing the net premium decay per week. And then I would think after 1 week out, go back to 50% profit. So here's a chart that I came up with to look at what my original premiums would be, what the approximate 25% profit is, and then if I could get that within that first week. Some of these I did make higher than 25% because I want to be beating out that percent. So for instance, if I start at 0.3, I made it a 0.2, which is a bigger drop than 25%. And then if it doesn't hit, set it up as a 50% good bill canceled. So when I look at the chart below, you'll see all the numbers that I pretty much figured out by doing these in the head on the pool. And I think it could be a useful way to possibly go about being a little bit more active on it, but being able to still obtain very good profits. I also want to go over 2 different places where I'm planning on donating to help with financial literacy. One of them already started, which is operationhope.org. And then the second one I will do probably in the future. I still want to do a little bit more research on it, which is the Young Investors Club of America. So let's look a little bit about these 2 places that I'm going to donate to. So the first one I already donated a monthly donation to is operationhope.org. And they help Americans that are in fairly low income brackets try to get back up past their feet and show them the financial education they need in order to succeed. They do different programs. You could volunteer, donate, help out with different community, private sector partners. Again, the main goal is to get rid of poverty and try to get people back to middle or upper class over time. And they are not-for-profit, 503B, I think it is. And sounds like a good program to work with. Another one that I'm going to be donating to is a Young Investors Society. And this one, they help with teenage entrepreneurs. They actually do scholarships to do business in college and whatnot. And they do a lot of outreach for young investors that want to learn about investing. And that's what one of my goals is on this channel, is to help out other investors. So feel free. I think it's a good idea to donate if you might be interested in, and another not-for-profit group. Again, I want to thank you for watching all the way to the end of the video. I know this is more of a vlog type post on my thoughts on trading, but definitely appreciate you guys watching. If you haven't signed up for the Patreon yet, in July, the whole month will be free. So we want to get on that early. Currently have 20 Patreons. I'm going to cap it at 30. So make sure you sign up if you're interested. You get 2 free cash group put recommendations every day, one-on-one help from me, and a private Discord. I have a lot of eager members that are thinking about signing up, so looking forward to helping out whoever is interested. Just like always, be nice out there, earn your premiums, have a good one.